Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The market has started off very strong for the US dollar, which measures the greenback strength against a basket of 6 major currencies as the USDXY is gunning for new cycle highs against its vast majority of its rivals. As it works higher, the market is now viewing this week's monetary policy announcement by the US Federal Reserve, which has at this stage infused further momentum due to the Friday's release of the higher than expected US Consumer Price Index, which hit an 8.6 high, which is also recorded as a fresh 40-year high. In light of that, the market is now pricing in a 50 base point interest rate hike this Wednesday after the Fed meets for its 2-day session. And furthermore, looking at the dollar index, we have to now take into its assessment that we could see a further gain beyond 105. And if so, looking at the broader picture, we have to go back further on the monthlies, as we can now see a possible target looking around 108 as a potential target. With the euro weighted at 57.6, we can see from the bearish outside range day and the topside rejection around that high 107, the market is now tumbling back heavily back to that 103.40 area. In light of the pattern, there is a strength of the trend from the ADX as it holds to a bullish or positive case, and with the markets holding quite heavily, may now see another 100-point drop for the euro for the start of this week. The Australian dollar has also plummeted further since taking out the level of 69.90, which was a key point, and now fall from 69.90 could actually see a drop back towards a region of 68.20.30, given from the current technical pattern, and reassess from there. The dollar yen case still holding to a mixed scenario when in terms of a bearish case. I feel that with the three dojis or tri-star doji in place is bearish and therefore should put a move back towards 132 figure 30 as initial target and reassess from there. Sterling has plummeted lower and taken out some levels now that has put a bit of a bearish spin on the actual outlook, and if so could see a further decline that looks towards a key point around 120.60.70. We are oversold when it comes to the monthlies. Looking at the weeklies, we're getting close to that region, and also the dailies are already there. But in light of the dollar strengthening quite aggressively, has put very much some of the other pairs into a bearish phase. Rejecting the top side at 196 for sterling Kiwi, still appears to be now in the middle of the range around 193. Nevertheless, from the technical pattern, still weak. I do expect to see further down tests, and that is towards that 191 after rejecting that top side at 196. Having taken the challenge back to the broader topside range, that was at 1,870.80, we're seeing a rejection from there on Monday, and from the rejection posted a very heavy candle and now crushing the support level around 1,824 to 1,800 and possibly 32 in a wide range. But technically I'm still keeping an eye on this pattern because we could actually see further losses, and that would see a move down to 1,788 to 92 in the start of this week. But keep an eye and wait for the MACD confirmation to marry up the RSI to support a further downside case. Since the retreat from the high 121, the market has taken the challenge back to 115.50 and held. Now I feel that technically we are breaking down, so therefore with the strength of the US dollar could actually weigh a little bit on the oil and therefore see the market take out the challenge of 115.50 and down towards a region of a potential target of 109. Well, that wraps it for the morning. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the great start to the new week.